다음은 줄리앙 르노블 Cme그룹 아태지역 총괄 대표님을 모시고 기조연설을 듣도록 하겠습니다. 큰 박수로 환영해 주시기 바랍니다. Please welcome him with a warm round of applause.
Good morning, everybody. On behalf of Cme그룹, I'm honored to be present here today at this conference and invited to participate in a very well-renowned and qualified conference. I want to thank the Financial News for inviting me, as well as congratulate the Financial News for what has been a very well-organized conference over the years and what promises to be a very interactive and interesting session today. My name is Julien Lenoble, and I'm Senior Managing Director for Cmegroup, overseeing the business activities and development of our company in the Asia-Pacific region. Based in Singapore, I've been with Cmegroup since 2011, and I'm responsible for leading initiatives to expand our Asia presence as part of our global growth strategy, including exchange partnerships, including here in Korea with the KRX, as well as the development of benchmarks, products, and services. I must say that the theme of this year's conference, opportunity, market, risk, is very appropriate, and there's been a lot happening within our industry, in the marketplace that we operate in, as well as for participants overall. This morning, I would like to address the topic of the state of derivatives industry, looking at the opportunities and the challenges for the market, and I will attempt to give an overview of how we see the derivatives industry today, what we see the opportunities and the challenges to be for market participants, and what all this means for our clients, as well as the regulators, the market operators. And I will use examples of how CME translate those challenges and opportunities into products and services that addresses what's ahead for our industry. So first, let me talk about opportunities and use some specific elements of what we have been facing with, what our market participants have been facing with, and what's laying ahead. First, I will talk about the OTC world and how the industry has been changing ever since the great financial crisis. Throughout 2013, there's been significant changes that have taken place in the global markets that we are all adapting to. The Dodd-Frank Wall Street reform and the Consumer Protection Act was one of them. Mr. Yoon just talked earlier about the size of the derivatives industry. Over $700 trillion of notional are still outstanding. And I will add some thoughts to the remarks that he gave on that topic. Following the G20 commitment to bring transparency, to increase liquidity, and to mitigate the risks embedded in how the OTC derivatives markets were and continue to operate, the CFTC implemented the Dodd-Frank bill to lower those risks and promote greater transparency. Dodd-Frank brings comprehensive reform to the regulation of swaps, which have not been previously regulated and were at the center of the crisis in 2008. There's been a great deal of focus on OTC products, and the mandate from the US regulator, the CFTC, to bring about clearing of those OTC products was implemented finally in phases throughout last year in 2013. This is not the only mandate. Clearing is an additional mandate to the mandates of reporting as well as trading. But clearing is the cornerstone of how this sector is being reshaped. For us at CME, we did not necessarily support mandatory clearing. We understand and see the value and merits of clearing and how much a CCP can bring in terms of transparency to the market. And in that sense, we worked very well and very hard with the regulators and the market participants to successfully navigate the 3 waves of implementation of the Dodd-Frank clearing mandate. Dodd-Frank has passed as law, and our focus now is to identify and accelerate the opportunities for capital efficiencies for market participants and offer them products that make sense within the context of the current regulatory framework and market. Our cleared volumes are increasing as the marketplace continues to shift from a compliance phase to an optimization phase. This is because market participants know about the advancement that we have already delivered, and they are confident in our abilities to continue to innovate when it comes to portfolio margining of swaps and futures, clearing IRS in non-deliverable currencies, futures that can replicate swap exposure, and operational enhancements like automatic netting and seamless termination. We are seeing a shift from a drive pushed by mandates and regulatory obligations towards the desire to look for opportunities in the new paradigm, in the new normal. This translates, for the record, in Cmegrroup having cleared OTC transactions during the year with a notional value of more than $15 trillion. Open interest, outstanding contracts cleared at our CCP at the end of December 2013 was $9 trillion, and today stands in the region of $12 trillion. So we see continuing growth, but growth that really means a shift from the participants from the OTC bilateral world to the CCP governed world. The focus on clearing OTC products will obviously remain for years to come, and in 2014, 2015, and beyond, a lot of OTC transactions will continue to be put onto CCPs. This is in the US, and this shift is happening worldwide. In the European markets, for instance, under the European Market Infrastructure Regulation, or EMIR, mandatory clearing for certain interest rate and credit products will also start, and likely start for derivative dealers next year in 2015, and thereafter for clients in 2016. We as a market operator and as a CCP are obviously leveraging our experience in the United States to expand the offering from the United States to our clients, to our London-based CCP, CME Clearing Europe, to make sure that our clients' needs are fully met in the new regulatory landscape, whether under the Dodd-Frank Act and the CFTC, or under EMIR in the European markets. Those shifts are very significant, and we continue to be committed working with participants as well as regulators to ensure that the mandatory obligations that the industry is facing can translate into opportunities and a better way to conduct business for the overall market. Let me shift now to another area of what represents, in our view, opportunities in the broader sense of the term for the derivatives market, not just the OTC markets, but also the listed derivatives markets. And centered around the concept of innovation, we see a lot of opportunities in an industry that is not at its infancy, but an industry that has been modernizing very rapidly over the few past decades. At Cmegrroup, we continually create innovative new products and services. we continually reinvent our ways of doing business to cater to the needs of the industry. For example, our agricultural products go back 165 years to the grain merchants, the dairy merchants, the butter and egg merchants, who first organized futures exchanges in Chicago and New York. For those of you who have been around for a while, you might know that following the commodities market development, in 1972, Cmeグ룹 created the International Monetary Market, the IMM, for the purpose of introducing the world's first financial futures contracts in the foreign exchange space, which was a departure from agricultural commodities. And it was difficult to conceptualize that derivatives, and especially listed derivatives, could be fit to handle risks in the financial products arena. But it was. And foreign exchange contracts were the first to be introduced in 1972, followed by a number of other asset classes which now are expanding across equities as well as rates and fixed income products. In 1987, another innovation was linked to the electronification of markets. Cmeグรุ๊ pioneered electronic futures trading with the conceptualization and the development of the Cmeglobex platform. And in 1992, the first electronic futures trades were made and transacted on Cmeglobex. Today, Cmeglobex makes our products available to market participants in more than 150 countries and jurisdictions, virtually 24 hours a day. In 2013, last year, we handled 3.2 billion contracts worth approximately $1 quadrillion in notional value. $1 quadrillion has a lot of zeros behind it. That's nearly 90% of our volume transactions that are going through electronic systems. Innovation, whether in terms of products, introducing financial products, and we continue to introduce financial products and commodities products to cater for the risk management needs of our participants, or innovation in how the industry is modernizing and electronifying, continue to be the lifeblood of our industry. And for Cmeグรุ๊ this is where we concentrate most of our efforts. The examples that I mentioned above of what we've done in the past I've combined with current advancements to define who we are. The world's leading and most diverse derivatives marketplace, offering a broad array of products across all asset classes and across the world. I'm going to turn now to another example of what represents opportunities and how we see our role in translating these opportunities into products and services that cater to the needs of the broader market and participants. And this year, in 2014, that has been certainly a year full of opportunities for us and our participants in the global market. In July this year, on July 30th, we announced our plans to acquire Trayport and Phoenix from GFI Group, a leading intermediary in the global OTC and listed markets. These businesses that we've acquired offer an array of sophisticated trading technologies and products to a broad range of financial market participants. The transaction of acquiring this business is expected to close by early next year, pending approval by regulators and shareholders of GFI. But this transaction will most of all bring into the Cmeグรุ๊ universe the Trayport trading software, which is central to how brokers, traders, exchanges, and clearinghouse interact in Europe in the energy marketplace and create a platform for future growth in Asia. Approximately, in this example, approximately 85% of European natural gas, power, and coal trading activity in bilateral, in exchange-traded, and OTC-cleared markets take place on Trayport. There is increased demand for risk management. As the energy industry deregulates in Europe, Trayport becomes a very successful standalone business within the CME Group that we believe puts us at the heart of the European energy markets as it continues to evolve. And that is an opportunity, obviously not just for CME Group, for the market at large. Trayport gives a deeper relationship with a set of commercial customers in a rapidly evolving European energy market. And it has already helped over the years clients to navigate the changing regulatory environment in Europe. And as CME Group is accustomed to working in highly regulated marketplace, this helps us meet the needs of customers even more broadly. Risk management needs of our customers in an ever-evolving marketplace, not just in Europe, but also worldwide. Our investment will help expand access to CME Group listed products and geographies for Trayport clients. And Trayport succeeds because it has a number of different brokers and clearinghouses and exchanges connected to it. That will continue, and we think that we can make the customer experience even better with further investment. CME Group intends to offer new European energy contracts cleared on CME Europe clearing platform and listed on CME Group European Exchange in order to be responsive to the needs of our European customers. As another example, in response to further customer demand, we are planning to launch European natural gas contracts in the third quarter of this year, in the coming months. That launch would be supported by both the CME Group and Trayport trading infrastructure and client ecosystem. Another example embedded in this transaction and in this acquisition is related to the other system that GFI brings to CME Group. That system is called Phoenix, and it provides leading price discovery, analytics, and risk management and OTC workflow connectivity services for global foreign exchange options. It has an extensive sell-side client base, particularly in Europe and in Asia, where foreign exchanges are heavily traded. This will further complement CME Group's buy-side focused FX product distribution and round out CME Group's participation in the broader FX ecosystem. Users of this system are preparing for the pending OTC FX options clearing mandate in various regulatory jurisdictions, and so the connectivity of CME Group and Phoenix will continue to conduit for OTC clients and access to CME Group's OTC clearing and exchange-traded options. Given our position, CME Group plans to apply its options expertise across asset classes to extend Phoenix's footprint beyond just FX. And clearly, those plans are just an example, an illustration of how the market is moving from an OTC world to a listed and a CCP world, and our drive to take opportunities and every chances that presents itself to support participants in embracing the new normal. Our plans to acquire these businesses, with these plans to acquire these businesses, CME Group recognizes the importance of the Asia region, as well as the European region, and we are keen to further globalize our business, where we have already achieved significant growth in attracting volumes outside of the United States over the last 5 years. Our efforts to expand outside of the United States continue to take root, and in a recent earnings call, for instance, we announced that international volumes at Cmeグ룹 accounted for 24% of the overall electronic trading volume that we transact on our exchange, which is the highest level that it's ever been. During the prior 5 quarters, that has ranged between 20 to 22%. This growth is a clear endorsement of, on one hand, what we're doing, and we believe we're doing something right for our clients outside of the United States. And we will look to continue to build on this strong performance by looking at opportunities and invest strategically in this region, in Asia Pacific, to strengthen our globalization strategy. Let me turn to some of the challenges that we see in the world and how we are addressing those challenges. Throughout 2014, in spite of the opportunities afforded to us and how we're trying to translate these opportunities into product and services that cater to the needs of participants globally, we have also seen significant macroeconomic and regulatory challenges. So far this year, there has been a common theme across financial markets around the world with regards to volatility. Volatility in virtually all asset classes is at historic lows. In addition, many market participants in a number of sectors, and especially in finance, in energy and commodities, are still working through the ramifications of the changing regulatory environment. As a result, market participants have significantly reduced their trading activity. And we saw an impact with lower than anticipated trading volumes in the beginning of this year through the third quarter, after a good start of the year in global markets, in the United States, of course, but also in European and Asian markets. At CME, while our overall trading volumes were down somewhat due to lower volatility and tough environment, we generally outperformed other global derivatives exchanges. Our diversified product offering and focus on expanding our global customer base and our global product and services offering has helped us. Going back to the previous point, innovation is a means of survival, and we believe a means of survival not just for our enterprise, but for the market at large. But this year is also proving to be very challenging for global markets, despite some positive signs. The US economy has been creating jobs since 2010, and the unemployment rate looks poised to decline below the 6% mark later this year, heading towards 5.5% in the first half of 2015. This steadiness of the economic expansion is convincing the Federal Reserve to end its quantitative easing program of asset purchase, known as tapering, which should come to an end this year. The Fed has indicated that while this program will terminate in the fourth quarter, as long as no problem develop in the economy, the rates changes from near zero levels will still be dependent on a number of economic factors that they are observing. In our markets, the federal funds futures market reflects the consensus view that the first rate increase from the Fed may come in the middle of 2015. Outside of the United States, however, the economic picture remains more clouded. In July 2014, the IMF, the International Monetary Fund, downgraded its forecast for the global economy for 2014 from 3.7% to 3.4%. While the downgrade of expectations was more due to a weaker than expected start to 2014 in a number of key regions in the world than some new bout of pessimisms had fueled, this downgrade does confirm that many nations are still struggling to reform and return to health 5 years after the global financial crisis. In China specifically, domestic demand fell more than expected as officials tried to rein in credit growth and prevent a real estate bubble. The IMF says it now expects the world's second largest economy to grow at 7.4% this year, which is 0.2% lower than its previous forecast. Still, this is a good result for China as it seeks to implement more market reforms and manage the growing challenges presented by an aging population. In Japan, the other large economy of the world, the national sales tax rise back in April this year confused a little bit the economic picture. The January to March quarter saw exceptional growth, but this was due almost completely to consumers going on a buying spree before the sales tax rise. For the April to June quarter, the economy shrank to offset the good news from earlier the year. Moreover, Prime Minister Abe has to decide if he wants the next planned increases in the sales tax to go into effect or not. That next sales tax increase is scheduled for the fall of 2015 in a year's time. All in all, though, one can sense that while Japan economy is probably on a 1.5 to 2% growth track long term, the promises of the Abenomics, as we know of this economic program in reform, are not necessarily coming to fruition. And the third arrow seems to be not bringing about the results that were expected. Turning to Europe, some of the most smaller and most troubled countries from the sovereign debt crisis are growing again. Greece, Portugal, Ireland are in that camp. But the continent overall remains in a malaise. High debt level in Italy and France continue to weigh, particularly as governments have been unable to roll out enough economic changes, reforms to convince investors about their will and turn long-term growth prospects into a reality. The IMF, again, cut both France and Italy outlook by 0.3 percentage points to 0.7% and 0.3% for the year respectively for France and Italy. And from our perspective, this may even be optimistic. Part of the challenge in Europe is that the banking system has not fully recovered. It is still undercapitalized and is not able to support economic growth. Indeed, Europe is in danger of slipping into deflation as prices are only 0.5% higher than a year ago. Given the lack of growth prospect in Europe, the relatively weak global economic outlook underscores how emerging markets are finding it difficult to extract greater output from their economies when a major trading partner remains troubled. Other than these macroeconomic challenges that are facing us all, our industry is also constantly being shaped and defined by governance, by risk, and control challenges. And besides the OTC world that has seen a lot of reforms being implemented and continuing to be implemented, let me turn to another hot topic that have come up repeatedly in media reports regarding high-frequency trading and its impact in our markets. High-frequency trading is not a practice that is new or unknown to Korea, for instance. And I will start by saying that as we are part of a highly regulated industry, the most important thing for a market operator as Cme그룹 is the integrity of markets. The integrity of markets for each and every market participants. Any discussion of how to enhance market structure, market efficiency, whether for derivatives, equities, or other products, is an important one to have. It is also important to acknowledge that markets continually evolve. And therefore, discussions about safeguards and efficiency must also evolve. Cme그룹 has been and will continue to be an active leader in those discussions. Likewise, we have been at the forefront of market and system innovations designed to safeguard and protect customers. As markets become faster and more highly automated, Cme그룹 has developed an array of capabilities to manage risk and volatility and mitigate market disruptions. Those include credit controls, stop-loss logic utilized during the flash crash, for instance, velocity logic, and messaging volume controls that will automatically reject anomalous orders caused, for example, by an order entry or malfunctioning algorithm. Our regulatory database captures hundreds of millions of orders and trades messages of market data messages, clear trades records, and position records on a daily basis. And because of this system and these audit trail records integrated with other reference data that we retain in our systems, we have an ability to have a comprehensive view of the market and bring about additional protection in case of market disruption. In our markets and in global derivative listed markets, high-frequency traders are not afforded any special access or information that is not available to all market participants. High-frequency trading and traders do not have access to or information about customer orders before the orders reach our systems. Market data is made available to all subscribers at the same time, and they have a number of options to choose how they want to receive it. So it's important to remember that market participants, as well as regulators and academics, have been discussing automated trading and high-frequency trading in a very significant way. And significant analysis have been done to highlight the benefits of having these types of market participants in global markets. They provide liquidity, which ultimately tightens the bid and ask spreads, reduces costs, and continues to increase the economic value of markets such as ours. Integrity of our markets is first and foremost for each and every participant. And all futures markets participants expect a marketplace that can rely on a system for price discovery, a system for risk management. While levels of certainty and confidence may change with the headlines, the efficiency of markets are predicated on their integrity. And that is what we have as a first order of priority when we operate markets. All in all, for us at Cmeグ룹, we have seized the opportunity that have come our way, and we have also embraced the various challenges and are turning them into opportunities for clients, enhancing our customer experience. We have certainly made great strides in building our own business for the future. At the same time, and more importantly, we have been very proactive in the regulatory process. We constantly work with our customers to help move their business forward under the new and evolving market structure. And all we do, we continue to create opportunities for our clients worldwide. We're focused on continuing to provide innovative products to our global customer base, and we're trying to drive innovation for the long term. At the same time, we're aware of market challenges and low volatility, and we are looking to turn those challenges into opportunities going forward. We want to ensure that the marketplace we operate in continues to be sound, liquid, and transparent. As a result, we intensify our focus on what we can control and how we can operate our business more efficiently. Our overriding goal is always to maintain the integrity of our markets for each and every market participants. With that, I have come to the end of my speech, and once again, it's a pleasure to be representing Cme그룹 at this conference, and I wish you all a very successful session during today and tomorrow. Thank you.
Thank you, Mr. Julien Lenoble. 네, 줄리앙 르노블 대표님 감사합니다.